Hello, everyone, and welcome to another exciting episode of Market on Mic. And I am really excited for this one. So, if you're joining us for the first time, I'm sure you already know that this is one particular podcast that is here to make trading really easy. So, if you're joining us for the very first time, you want to make sure that after this particular episode, you actually go back and take it from the very first episode so that you are able to understand and build a bit of progress.
Thank you. And it's actually very good to be on another episode of Market on Mic. And all right, this is actually the podcast. If you've probably been listening to us from the very beginning of this podcast, you know that the goal of this podcast is actually to bring closure to you when it comes to trading and investing with the sole purpose of making money. So this podcast actually bridges the gap between new, struggling, and existing or seasoned traders. And I'm actually Daniel. All right. So thank you very much, Natasha.
Okay, and on today's episode, this is one episode that is actually, as always, going to get the traders community talking. We're talking price action versus the indicator. Which one should you trust more?
That particular debate has been always wild when it comes to the trading community. So it's one of those debates that never really ends. Everyone is always trying to say price action or the naked chart or just looking at the market move is far much better than having the indicators where you have to have so many tools on your chart, or having to make use of so many tools to make trading decisions or investing decisions and the likes. So some say that if you're not trading price action, you're not trading at all. And on the other hand, we have a lot of indicator traders swearing that their indicator is like a religion. We literally abide by it.
Okay, so here's the real question, right? Do you actually have to pick a side, or can you actually use both?
That question is a very tricky one. And I'm very sure that at the end of this podcast or this particular episode, we'll get to highlight which one is better. So let's break it down from the very beginning. When we talk about price action, probably you are new to trading or you're new to investing and you don't know what price action means. It's just basically looking at the price movement or looking at the fluctuations in price. Maybe you're using a line chart, or you're using a candlestick chart, or you're using any kind of chart. Just basically understanding how the market moves, candlestick patterns, demand and supply. If you don't know what demand and supply actually is, you can just go over to our previous episode on cracking the code and you can watch or listen to what the demand and supply actually is. So also breakouts, retest, and the work. So that's basically what price action is. So Natasha, can you just give us a little insight of how indicators, what indicators is?
Okay, so before I get to that, I just want to add to that. So the price action is like reading the market's mood without reading subtitles. That is, you can actually see what the market is doing without actually needing anything like your indicators to be able to tell you what is going on.
More like so proper.
So you're literally watching price tell its own story.
All right, and it's actually not for everyone because price action actually takes quite a couple of time, right? Because you have to sometimes spend a lot of time, especially when you're starting out as a new trader or probably an investor. You may need to spend more time on the screen trying to look at what the market is doing part time, and trying to understand the trend, or trying to understand when a breakout happens or a retest happens, or when a candlestick is forming, all of those things. So you may have to spend more screen time. If you're doing a price action, you may need to be more disciplined because you're really just seeing the candle moving up down. So you want to be more disciplined and also understanding market psychology. So there's not just any flashing signal, all right? It's just structure and price reactions.
Okay, good. So on the other hand, we have actually got indicators, right? And when you're trading indicators, we're talking about these are tools that are used by traders to help them understand the market. So we have from the RSI, which is the relative strength index, to your MACD, that is your moving average, convergence, divergence. You also have the moving average, the Bollinger Band, and these tools use past data to help forecast potential moves.
And when it comes to indicators, there's a bunch of them, right?
A lot.
Indicators from the 1950s. We have a lot of people creating new indicators and the like. So you may not be able to keep up with these particular indicators. So even beyond the one Natasha mentioned, We know you hear things like Elliott waves, you hear things like Ichimoku, which is actually a very fun,
You have your
interesting
ADX. Like, there are a lot of them.
a lot of them actually. You have ATRs and the like. But at the end of the day, these particular indicators, to a great extent, they can actually help you with trading.
However, indicators can sometimes give you misleading or false signals.
Yeah, they lag a lot.
And using too many indicators at once can make things confusing. With too many signals, it can become hard to know what to focus on, and you might end up second guessing your trade.
And when it comes to second guessing your trade, because if you're looking at having so many things on your chart, maybe you have your chart, you have ADX, you have RSI, you have moving average, you have polytech bands, you have Chimoku, all on the same chart. You could actually run really crazy. So it could give you could second guess your trade, lose confidence, probably, and most indicators get to lag
a whole lot. Yes, they actually do.
All right. So at the end of the day, indicators can tend to give you structure and confirmation. It's just like maybe you're using the RSI. RSI basically is called Related Strength Index, like Natasha rightly said. Basically, the most important levels of thing when it comes to using RSI, it just shows you the strength of the buyers compared to the strength of the sellers, and they are like regions or zones around it. So probably when price is above a certain level, it is seen as overbought, and where price is below a certain level, it is seen as oversold, and you should be anticipating either a reversal when it is either overbought or oversold, right? So probably using your structure, and maybe you're using price action, you're using indicators, trying to find out oversold and overbought regions can actually give you some level of confidence. Maybe you want to buy at demand and RSI at maybe the oversold region. Then it could give you like a good confidence to say, okay, you can strengthen your bias to actually go in for buy on any instruments.
Exactly. And I personally, I like using indicators like RSI just to avoid chasing price at the wrong time. I feel that it keeps me grounded.
Yeah, but RSI is actually a very old tool, and I've seen a lot of traders use basically just RSI to trade, and they also still make a lot of money with it. But for me, I'm basically like a price action guy. I love using my price action, love making use of demand and supply and some other technical tools and the likes. But when it comes to my indices or my trading on the stock market, I love using the 50 moving average. It just shows me the trend. It shows me the trend of the market, and I prefer using the 50 period moving average, and it helps me track the trend and let price action guide my entries.
Yes, so guys, instead of asking which is better, maybe the real power is in combining them. Yes, like bringing your price actions and your indicators together. That is, letting your price action set the scene and let your indicator back up your conviction, right?
Yeah, exactly. Like I said, conflict. So you imagine you're using price action, you're seeing the trend of the market, or maybe the moving average helps you to find the trend of the market, and maybe you see price at demand and supply, and you're seeing RSI bought or sold, but you're using MACD, seeing convergence, divergence, all of those things.
Like there's just so long.
Yeah, although you can actually learn all of these things, maybe a YouTube video, maybe if you want, maybe you need an advice or how to get these indicator videos on this indicator, you can just comment in the comment section and it will tag a video for you or something, right? Like I said, combining them could give you much more confidence and power when it comes to your trading. At the end of the day, it's not really about just the indicator or price action. The source comes from properly or actually combining them. So use price action to know what to look, and indicators to call more or less fine-tune, know the exact time, the when to actually execute or go into the market.
Yeah, that's some pretty great advice. But most importantly, traders, use what actually works for you.
The goal is to make money.
So use what works for you. So trading isn't a one size fits all. If something helps you stay consistent, stick with it. Learn to ride with your strategy all the way. So don't say, oh, because I saw this person doing this, I have this person with this very fancy chart. Trust me, the chart can really be really fancy when you have all those indicators on your chart and all of that. But at the end of the day, if it doesn't work for you, it doesn't work for you. And if you found something that it's already giving you consistent profit, then just actually stay with it.
Yeah, when it comes to being fancy, that's some indicators that
The
It's
colors are
like
so nice. Like your chart literally look like a rainbow.
actually
Actually, that pretty.
and if you're not careful, it could end up looking fancy, and at the other side, it is confusing. You don't know which to
Yes.
follow. You know what?
You're having different signals. One is going for buy, one is going for sell.
You know what
And
to do exactly.
one thing about this market is that there is a lot of knowledge, but you need to learn how to filter,
Yeah,
right?
filter.
Because if you take in everything, it's going to confuse you the more, and you would find yourself losing money, which will definitely drain your psychology. So at the end of the day, you're just going to be a mess on the
Right.
market, and you really do not want that to happen to you.
Yeah, so like you said, at the end of the day, just stick with what is making you your money. So probably you're a newbie, you're just starting out and you're yet to figure out your footing. Maybe you don't know what to do, you don't know if you should stick to price action or probably use indicators. If I'm to give an advice, just start very simple.
Yeah.
Start very simple. Try to learn. Okay, we have to demand the key levels in the market, maybe the demand and the supply regions. What does candlestick? How does the market move? And all of that. Then probably once you start getting used to it, you can then inculcate one or two indicators, maybe add RSI to give you much confidence to
And
trading.
indicators actually, we have different indicators that work in different ways. We have some that are on the trend, we have some that are on the price. Depending on what you're looking to achieve, you just want to settle down, do your analysis, and just like we said earlier, you want to try all of this on the demo. You don't have to try with your real account, especially when you know that you don't have that account size. So you want to be able to be as minimum as possible. Remember, your strategy is your roadmap to success. So if you do not trust it, you do not trust it. So you want to build something that you can actually trust.
Yeah, that's very true, and that's very insightful over there. So at the end of the day, it's not really about looking smart or your chart looking smart, looking interesting, but it's about trading smart, which is very, very
smart
important.
guy, trading smart. Let us know. Are you actually team price action or your team indicator? Or you're actually both of them? You can always drop us a message, drop us a DM, and all of the strategies you're talking about. We really like to know how it has improved your trading journey, what you've learned from them. So please share your insights. And of course, if there's anything, any strategy you're looking to sharpen, you want to hear us talk about it, please do well to send us a message. Tag us on Market on Mike. We're on Instagram, we're on Twitter, we're on Spotify. Do well to subscribe, guys. And now we are on YouTube.
Yes, we are YouTube guys.
We are YouTube, guys.
This particular episode, I'm sure you want to listen to it on YouTube. So if whether you're a team price action, team indicator, team both, you can also tag it or comment in the comment.
We want to hear your
So,
thoughts, guys.
Yes, we want to hear it. So, and also don't forget, you need to subscribe. Yes, subscribe, put on the notification bell so that you get notified anytime we upload a new podcast episode. So subscribe, like our video, share with your friends, share with your family, share with your enemies too. Let them know how.
Okay, and guys,
Yes.
this is CPI week.
Yeah,
CPI week. And if you're hearing CPI for the first time, we're just talking consumer price index. And we know that this is one news that, every investor, every trader would be looking towards to, because it's going to give the market a particular direction that we might be following for the rest of the week, for the rest of the month, or even for the rest of the quarter. So you do not want to avoid your fundamentals as much as we're talking technicals, we're talking strategies. Fundamentals are still very key, especially in this time of the market.
Yeah, fundamentals are very important. In fact, as a trader or investor, your ears need to be fixed to the ground for economical news.
Follow what Trump is saying.
Yes, especially this period, this era of trade wars happening between the United States and other global economies around the world. Your ears need to be always to be on the ground, so you are always informed and you're able to make better decisions at the moment.
Yes, and don't forget, we have also spoken about journals. I hope we're journaling.
Yeah,
We
journal
want
your
to be
trades,
able
guys.
to journal our trades, journal our emotions,
Track your progress.
track your progress, know what you're doing. We are not just here to lose an amount of money and make you want to actually make a heavy load of money. So you have to keep track. And just like we said on the last episode, this is a new quarter, and I'm sure we already have our financial goals when it comes to the financial market. So let's not just be there and putting money in without getting to track what is really happening with that money. It's not even easy to make money at this point. So you want to make sure that you have in check, in contact with everything that you're doing.
All right, so thank you very much, Natasha. So this has actually been an exciting episode,
Yeah.
right? This actually is coming to an end. So until next time,
Yes.
guys, stay focused, stay sharp.
And always trade with confidence.
Yes,
So-
trade with confidence, very important.
So
very
catch you in
important.
the next episode, everyone, and
See
see
you in
you
the
in
market
the market.
Bye.